the accounts. If you have subscribed, you can do that for regular updates. Now, the question says, Winky, this is the question on revaluation of property, plant, and equipment. Winky Company has an item of land carried in its books at 13 million, stated S, and 2 years ago, now this is the figure now, right? This is the current figure. We are told that 2 years ago, a slump in land values led to the company to reduce the carrying amount. Land fell in value, so it reduced carrying amount from 15 million. So there was 15 million, and then it was reduced by 2 million to arrive at 13 million. And then this was taken as an expense in profit or loss. This is typical. When you have a revaluation loss, usually it goes to profit or loss, unless it reverses the previous gain that went toward the comprehensive income. And then there has been a surge in land prices. Land prices have risen in the current year, however, and the land is now worth 20 million. So the worth of the land currently is 20 million. Now, you just have to ask yourself, in the books right now, first of all, it says write journal entries for the revaluation in the current year. How would the double entry using journals be? All right, now ask yourself, as of now in the books, land is carried at 13 million, but actually it is worth 20 million. So we see that there is a revaluation gain of 7 million. So that's why we say there is a revaluation gain of 7 million, that is 20 million minus 13 million in the current period. And so usually when you have a revaluation gain, it means that the asset has risen in value. So we have to debit the asset. So I would come here and say debit land by 7 million and credit something, credit the revaluation gain. We know that we have to credit the revaluation gain by 7 million, but the issue is, should that revaluation gain be taken to profit or loss or to other comprehensive income? That's the point here. Now, usually when you have the revaluation gain, it should go to other comprehensive income and then to revaluation surplus in the statement of financial position. But if you have the previous loss that went through profit or loss, it has to compensate that first. So it has first to go there where the previous loss went. All right? And here we are told that before there was 15 million, and then when land prices fell, it went to 13 million. So there was a revaluation loss of 2 million, which was taken to profit or loss. All right? So that's what we have to, that's why we say that this is credited to other comprehensive income or revaluation surplus after being credited in the profit or loss to reverse the previous revaluation loss of 2 million. That is 15 million minus 13 million, right? All right, so this is what I will have to do right here. So I would credit as usual, but first I would go to profit or loss. So I would have to credit revaluation gain through profit or loss by 2 million, and then the remainder would go to other comprehensive income and then to revaluation surplus in the statement of financial position. Now, let's repeat this same example, but now we start with the revaluation gain and then we'll use the revaluation loss to reverse the gain. This is the question number 2. Question number 2 says, Winky company had an item of land carried in its books at 20 million. This one is the value in the books, the carrying amount in the books. Then 2 years ago, a surge in land values led the company to increase the carrying amount from 15 million. So 2 years ago, there was 15 million, and then we raised it actually to 20 million. So it increased by 5 million. This was taken as a revaluation gain in other comprehensive income. Even if you're not given an explanation, we presume that the revaluation gain is taken to other comprehensive income and then to revaluation surplus, while the revaluation loss is taken to profit or loss and then to retained earnings. All right. Now the question says, there has been a slump in land prices. Land prices have fallen in the current year, however, and land is now worth 13 million. So currently, land is worth 13 million only. Write the journal entries for evaluation, for the revaluation on the current year. This is what we need now. How would you go about this? All right. Now ask yourself, as of now, you just have to check on whether there is a revaluation gain or revaluation loss. In the books, you have 20 million, but the fair value is actually 13 million. So this means that there is a revaluation loss of 7 million. That is the difference between 20 million and 13 million in the current period. If we just have this, You should, when doing double entries, you should usually judge if you have assets or liabilities. I have an asset, that is land. It has decreased in value. So since an asset has a debit nature, I would reduce it by 7 million. So I would credit land by 7 million. After crediting land by 7 million, I'm pretty sure that I have to debit the revaluation loss by 7 million. But the question comes, should all these 7 million be taken to revaluation surplus, to profit or to other comprehensive income, to profit or loss, or should I split it? Now you ask yourself the question and you get the answer. Usually the revaluation loss is taken to profit or loss, usually, but this is after reversing the previous revaluation gain that went to other comprehensive income. If you take a look at this question, we are told that in the books we have 20, but 2 years ago it was 15. So this means there was a revaluation gain of 5, that is 20 minus 15, 2 years ago. So in the books, there will be a revaluation gain of 5 million situated in the revaluation surplus. So I first have to offset that by taking this revaluation loss to actually the same revaluation surplus through other comprehensive income. So I would have to debit the revaluation loss in other comprehensive income, and this one would go and also debit the revaluation surplus. So that the revaluation surplus will be reduced by this much amount, and then we remain with balancing figure of 2. So I would have to debit the revaluation loss through profit or loss by 2 million. Just like this, and everything will be fine. So it's very, very important to know how to deal with these items. It's very, very essential. Revaluation gain usually goes to other comprehensive income after reversing the previous loss that went through profit or loss. And revaluation loss usually goes to profit or loss after reversing the previous revaluation gain that went through other comprehensive income. So simply speaking, just take a look at what occurred previously. Thank you very much, and if you haven't subscribed, I advise you to do that for regular updates. All right.